Hey everyone, welcome to another episode of the What's Trending in Finance Report, bringing you the latest and greatest news that directly impact our financial markets and more importantly, our portfolios. This week we had some tension in Hong Kong, we had the president go hand to hand against a certain social media company, and on a lighter note, Disney World's reopening in Florida. So without further ado, I'm your host Ayan, welcome to AQ Markets and the WTF Report. As always, let's begin with some overall United States market news. This week we had the Dow Jones up 4%, we had the S&P 500 up a little bit over 3%, and on the contrary, we had an additional 2.1 million people file for unemployment, bringing our grand total to over 40 million unemployed, which is around 23.9% of the workforce, which, again, this is America. Apparently we really don't care about that in the stock market. So this modest rally was primarily driven by optimism and honestly nothing else. Like I mentioned, we have some pretty bad unemployment numbers and people just wanted to drive up the market just because they think that everything is going to be okay in the upcoming months. We had all 50 states officially reopen, and with that comes the opening of businesses that allow more people to spend and hopefully will allow the jobs to come back. So people are expecting these factors to really aid the market going forward. But at the end of the day, we really need to see what the facts are. We need to check in with the unemployment numbers in the upcoming weeks to see if that they're going to continue increasing or hopefully decrease. As I mentioned, with 40 million unemployed, we want to see that number start to go down because we don't want 23.9% of our population unemployed. What added a lot of volatility this week, mainly on Thursday and Friday, had to do with the Hong Kong situation. Now, I'm not going to deep dive into that because it's more of a political issue. I'm just here to discuss the finances of it and how it impacts the stock market. But earlier this week, the Secretary of State, Mike Pompeo, gave an announcement to the United States saying that the United States is not going to recognize Hong Kong as an autonomous authority, which means that it's going to default back to the authority of China, which, as you know, the United States and China are already having a bit of issues that involve trade, tariffs, and sanctions and everything like that. So this is where the Hong Kong debacle comes into play for us. In the United States, we actually have 1,300 companies that have business in Hong Kong. And additionally, there's $66 billion of trade that is exchanged between the United States and Hong Kong, which is primarily agricultural material, agricultural foods, plastics and machinery, and additionally some luxury goods. So this is a pretty big industry that is associated with Hong Kong. Now, if they were to fall under the Chinese jurisdiction, then that means that these tariffs and or sanctions will also be imposed between Hong Kong and the United States, which would impede a lot of our businesses that operate between Hong Kong and the United States. So the market reacted to that since some of these companies are potentially going to be losing customers and losing revenue. Moving on to industries, the airline industry, as I mentioned, had a pretty booming week, along with the cruise lines, and again, all driven by optimism. It's not really justified. There was no updated news on their revenues or any projections, but you know, when people get excited, they believe that the stock's worth more, and then it rallies, and then as you can see, it kind of, some of these stocks tapered off towards the end of Thursday and Friday. We only had a 4-day trading week due to Memorial Day, so Tuesday and Wednesday had some amazing gains for these types of companies, and then if you sold then, you know, you made a little bit more money than the other guys. But overall, it's really kind of unjustified. We need to see some really good numbers come out, or we need some better projections from either the companies or from the governing states and countries that are allowing flights to take place again. Additionally, oil had a pretty good week as well. There have been multiple production cuts, mainly led by Russia, and Russia is saying that this will allow for a lot more price stabilization in the future. Now that the demand has slowly coming back, they're keeping the production at what the cuts were before, which is allowing the price to slowly climb back up. As the global pandemic kind of eases down a little bit, demand picks up even more, and then the production will pick back up. Hopefully we could see a positive trend in oil, but then also see it stabilize to back to where it was earlier this year. So now let's get into the juiciest part about this episode, and that involves President Trump and Twitter/Jack Dorsey, who is the founder and CEO of Twitter. And I mentioned his name because he was directly behind this, and it all started with this. Donald Trump posted this tweet, and in the tweet, it discusses mail order ballots, some information about it, mainly an opinion. And so what the Twitter team did with the guidance of Jack Dorsey is they flagged that tweet as a misinformation, and they put a little link showing how mail order ballots actually work. Again, I'm not here to discuss politics. I'm going to talk about what happened and how this impacted the financial markets. So in response to that, Donald Trump actually ended up creating and signing an executive order. What this executive order is asking is he's asking the FCC to look into and revise Section 230 of the Communications Decency Act. And what this act effectively, well, what this section of this act actually allows is that it gives social media platforms and blogs and other things on the internet, it protects them from their content that is posted onto their sites as long as they're acting in good faith to remove illegal content. So that basically means that anything that gets posted on there, they're not liable for any lawsuits or damages that ensue because they were acting in good faith to do their best to remove as much illegal stuff as they could, which obviously it's difficult. You take YouTube, for example, with billions and billions of videos. Someone posts something obscene on there, I mean, they do their best to remove it immediately, but if it was up for 15, 20, 30 minutes, they're not going to be liable for that because they did act in good faith to remove it as quick as possible. The details behind what President Trump actually wants completed with this executive order hasn't really been discussed in detail, nor has it been verified. But at the end of the day, Twitter and Jack Dorsey did not care. What they ended up doing actually was, unfortunately with the given situation in Minneapolis with the riots and everything, President Trump made this tweet, and in this tweet, Twitter ended up flagging it for glorifying violence, but decided to keep it as it was in their best interests to keep it. However, it was flagged. So clearly they were unfazed, they didn't care, and they're going to continue doing exactly what they did. On the other side, with another social media giant, Facebook, Mark Zuckerberg actually went against Twitter and Jack Dorsey and their actions and gave a statement saying that effectively, we're not going to do what you guys are doing. And honestly, he did that to protect his company and to protect the shareholders, because if you look at what happened to Twitter, they're down over 7% this week versus Facebook's down around 5% this week. And the real reason that this is going to affect social media companies like Twitter and even Snapchat and Facebook is because if something in this Section 230 of this act gets repealed or revoked or revised, they might be liable for some of the content posted, which would lead to lawsuits, which leads to millions of dollars, and also millions of dollars in hiring lawyers and defending these cases. Additionally, they might need to hire additional staff to really start policing their websites. And overall, it's either going to cost a lot of expenses in lawyers, or it's going to cost a lot of expenses in further software developers and other research to try to mitigate some of the content that's posted that might be illegal. So that's why these social media stocks are doing a little bit badly this week. At the end of the day, if you think that this could be a buying opportunity for them since they're trading at a 5 to 7% discount, this could be an interesting scenario to look at on Monday morning. The best part about all this is Germany actually offered Twitter to relocate, because at the end of the day, when you have a US listed company, they have to abide by the US laws, but you have a foreign listed company, they don't have to abide by all the US laws. So this would be a bit of a loophole. So Twitter, they hadn't responded to that invitation. However, it would be very interesting to see if they actually would follow through with relisting in a different area. They would still be allowed to list their stock for US investors, but they would just have to abide by a different set of rules, which honestly would be pretty funny. Moving on to some more just stock-specific news, let's start off with some good stuff, and that's Disney World's reopening. Maybe that's actually not a good idea, but it's Disney World, so it's fine. They're going to be imposing some new rules and regulations, and they're basically going to be operating off of a reservation basis to minimize how many people are in Disney World at one time, and they're also going to be canceling the parade and not really allowing, people to sit next to each other in roller coasters. So, I mean, it's not the full Disney World experience, as some of you may know or some of you may remember, so I don't really know how that's going to hold up, but people love Disney World and they're going to go. This is going to allow them to operate and hopefully generate some revenue for the rest of the year. Not going to be at full capacity, so it's not really something to be super excited about. But if all goes well, then these restrictions will slowly ease over time and they'll be fully operable again. In the aerospace world, we had two of the main companies that had some pretty good news, but didn't really result in anything positive. Boeing, for starters, is going to restart their production of the 737 MAX planes. Good idea, I don't know, but their stock actually had a pretty decent rally going into the first 2 days of the trading week, but then the consumer kind of pessimism, I guess you want to call it, kicked in and the stock kind of went down and ended up fairly flat throughout the week. People are still going to have trust issues over this plane, and they still haven't fully resolved some of the lawsuits associated with this plane as well, but they apparently redid the whole design and checked the safety over again, so I don't know. A lot of orders have been canceled for this plane, mainly because of the crash, but then additionally, because the airlines are not going to be doing the capital expenditures. So Boeing is still selling very, very low from its all-time highs. The future of it really just depends on how they recover from not only the cancellation of orders, but also from their past, which has a lot to do with the 737 MAX planes. In other news, Airbus won a contract with NASA to provide the shuttle for the lunar space mission. So they also had a bit of a nice opening on Monday morning, but then slowly tapered off just because it's really only one deal and they're still hemorrhaging a lot of sales from the airlines that have had to cancel orders. So overall, they didn't really do so hot, but they had a little bit of positive news, which can show at least some sort of good revenues going into 2020 and 2021. Hertz, the rental car company founded in 1918, filed for bankruptcy last weekend. They missed their debt payment, and that basically means they defaulted and they had to file for bankruptcy since they aren't able to make their payments. This directly affected a huge hedge fund manager, Mr. Icahn. He lost around $2 billion on this because he didn't think they were going to go bankrupt. So, if you lost money this week, at least you didn't lose $2 billion, so you can feel a little bit better. Now, this is going to be an interesting situation. Just mainly one, to watch how the other rental car companies are going to react to this, and if the overall sentiment about rental car companies is going to be extremely pessimistic going into the rest of the year. And then additionally, they have around 36,000 cars in their fleet across all of their locations. And most likely what's going to happen is they're just going to liquidate these cars. So one, that's going to flood the used car market, but two, it's going to flood it with cheap prices since the debt holders just want their money back. In other automotive news, James Bond's favorite car company recently just announced a new CEO. Aston Martin has selected the previous chief of the AMG division of Mercedes-Benz to be their new CEO, which poses a great opportunity for them. I'm a huge car fanatic, but I'm not going to dive into the whole car details of why this is really good. But overall, this will provide a really big positive sentiment for Aston Martin going forward. Since they're in IPO, they have done incredibly horrible. They're actually down 90%, as you can see by this chart. But recently, since the new announcement of this CEO, this week the stock was up 48%. Obviously, being up 48% doesn't cover the 90% they lost, but this shows a lot of optimism in this. So if you have access to trading foreign stocks, it would be in your best interest to look into this because this could pose a pretty good future for Aston Martin going forward. And since they're trading at such a low number from what they IPO'd at, there could be potential growth. Thus concludes this week's episode. Thank you so much for watching. Please like the video, drop a comment. If there's anything I missed, if you want my opinion on something, if you want to discuss a topic I discussed, or if you want to compliment my awesome new haircut, drop a comment. Don't forget to subscribe to the channel and also share it with a friend or family and then force them to subscribe as well. Very important. Thank you guys. I'll see you next time.